Here we're going to take a look at using an asset allocation calculator, which can help you on the second part of your project, in which case you need to allocate assets for the 401k, and you also need to do so for their college savings fund for the child. Now, you may want to read, there's a few pages at the end, toward the end of chapter 11, and you may want to look at those pages before you do this. If you go ahead, once you're ready to use the asset allocation calculator, you can go into Google and put in asset allocation calculator. It'll bring up a variety of them. The one I do is bankrate.com. Some of the other are in there, but they'll require you to, get a free trial account or something like that. So this one you can just go in there and use it and be done with it. Okay, and so we go in there and it brings you right up to the actual asset allocation calculator. And so here, put in for your project. They're starting out age 32. They have zero amount in their 401k at that point in time. Okay, the savings per year, $65.70. I took their salary times 6%. That's how much they're putting in, which was $43.80. And then the company is putting in half of the $43.80. The company is going to match. So that's $21.90. So the $43.80 that they're going to put in plus the $21.90 that the company is putting in as a match is $65.70 per year. It's going to go into their savings, into the 401k. Okay, for the tax rate, I used a 25%. Okay, it's possible that they would be 15%, although they don't really have that choice. They have a less than 15% or 25%. So I left it with 25%. You just leave the income as zero. The risk tolerance is how much risk do you tolerate, because the project doesn't tell you, the pangs, what their outlook is. So if you're real aggressive, you want to invest in stuff with high rates of returns, knowing that some of that stuff are going to be losers, but you want to do that because you think in the end you will do better. Okay, and that's very possible. You might be very conservative, in which case you only want the safest investments. You don't really want to invest so if you invest in stocks, you're going to invest in blue chip stocks or something that is on the safe side. You want to put your money in, a lot of money, into bonds and money market savings because that is safer. Okay, so for the project, you can choose your own personal risk tolerance, since it doesn't tell you how aggressive or conservative they are. So in here, the risk tolerance is at 5, which is in the middle. It goes 0 to 10. 0 if you're most conservative, and 10 if you're real aggressive. Okay, so this is 5, which is in the middle. You can put whatever for the project, whatever you want. Okay, there's no exact right answer for these asset allocation things. Okay, as long as you can explain what you did and why you did it that way, it'll be all right. The economic outlook for the future, again, it's 0 to 10, and a 5 is just kind of in the middle. And so I just left it at that. But if you think that there's, you know, strong economic outlook for the future, or a poor one, then you can change that coding there. Okay, then you hit this blue calculate button, and it shows you this pie, and over to the right it gives you the exact numbers that you should, if you're 32, invest in stocks, 76%, in bonds, 9% of your 401k should be in bonds, and cash and money market accounts, that's included in cash. Cash, savings accounts, money market accounts, things like that that aren't going to get you a lot of rate of return. You know, a savings account might give you 0.5% or something, and money market will give you more than that, but still, they're not going to get you very much. If inflation goes way up, then you'll actually not be doing well, okay, if you just got it all in that. But it is safe, and it's stuff you can get out quickly if you need to. So you should always have some in those kind of things. And at 32, they're suggesting you should have 15% in those types of things. Now, if I change the age to 67, okay, by this time, if you were to use your time value of money and you put in that we put in $65.70 a year for the entire year. In fact, we can get the exact number. Okay, here's the financial calculator I like to use down here at fncalculator.com. Okay, and they have a bunch, and this is the same as the Easy Calculators app you can put on your phone. Okay, and so we said that 65.70 is what we're going to put in each year. You want to make sure the compounding is down on, because we're talking about yearly, okay? The annual rate, it said, was 8% per year. And if you're talking from 32 years old to 67 years old, that's 35 years, okay? And so how much will we have when we're done? Okay, by the time we're 67, you hit this FV button, okay, and that'll tell you. So 1,132,000. So we can go back to our asset under current assets. Okay, you can just have it as being rounded off. Okay, and we can leave everything else the same and hit calculate, and now notice that our stocks have dropped down at age 67. Now we're getting ready to retire. We're going to put a lot less into stocks, which aren't as safe, and a lot more into bonds and money market savings accounts than we did at the age of 32. Okay, like I say, there's different calculators. Some of them you can go through and they'll ask you a bunch of questions, and you answer the questions as if you were the people in the project, and it will end up giving you maybe some slightly different results than what this little calculator will do. Also notice that what went into the 401k, I just used the same number at 67, but technically their salaries are going up every year, so that amount that's going into the 401k every year is also going to increase a little bit. Okay, so this can give you some general ideas. You don't have to use an asset allocation calculator, but it just might be helpful, helpful tool for you. If you like to use it, you are welcome to. You can just go on to onto the project and figure out yourself how their 401k and how the college fund should be allocated.